Good evening to all the chartered accountants who are participating in this exclusive VCM organized by the GST and Indirect Taxes Committee. I must call this day as a great day in the annals of our committee because we have here with us our very eminent, erudite and intellectually charged immediate past president CA Atul Kumarji Gupta. Esteemed friends, we welcome him back in the corridors of knowledge sharing. I should certainly use this word, in the corridors of knowledge sharing. We welcome him back. As a vice president and the president in office, demanding the work in the office, he was not able to, in fact, speak on the topics of his choice. He was wedded to the institute's work and we saw him closely working in the institute. In the year 2010, one fine day, I met a young gentleman who introduced himself as a Northern India Regional Council member in New Delhi when I was then in the Central Council in the first term. And little did I know then that this young gentleman will one day become of that stature that I will call him my President Atul Kumarji Gupta. Of course, he will be formally introduced by Sushil Kumarji Goyal, our very honorable Vice Chairman, who was also my chairman in the committee. In fact, if I am the chairman today of this committee, and if I am getting enormous love from all of you, these two gentlemen on the screens are responsible for that. Sushilji Goyal said that I would take some other committee, and Atulji said, okay, then Rajendra Kumar sir, you will be the chairman of the committee. So if I am someone today, the entire credit goes only to these two gentlemen who are seated here. It is my proud privilege to be in the midst of these two great human beings, I must say. Atul Kumarji hails from New Delhi. All of you know him. I need not introduce him at all. It is like introducing you to the sun or the moon. When I called him and told him that, sir, we are going to have a VCM and we want you back, please let us know the topic. And the topic that he chose was input tax credit, because it is the very fulcrum of the GST. And the topic is such that it received more than 6,000 plus registrations of our members, and they are all watching him or will be watching immediately, maybe in another 5 minutes. We already have crossed about 3,000 plus logins. Friends, in the next 2 hours, of course I know 2 hours is not sufficient to deliberate on a nebulous topic like input tax credit. Here we have Kumarji Gupta. I heartily welcome him back to the committee's VCM. I also welcome our very energetic, efficient, and a person who shows us proper direction and way, my chairman, whom I call very popularly CA Sushil Kumarji Goyal, the Central Council member, and currently holding the position as Vice Chairman of this committee. He is one person who has been responsible for our growth and being very, very sharp, being very, very erudite. He has been a guide to all of us. I welcome him, and I also welcome the office secretariat headed by CA Smita Mishra and Ajay Ray to this program. I welcome each and every one of you once again in these tough times on humanity. I am confident all of you are fine and well. I now request our Honorable Vice Chairman sir to introduce the topic of the day and also formally introduce our leader CA Atul Kumarji Gupta to all of you.
Thank you, Chairman sir, for nice word you have spoken. Under your leadership, we are doing so many things. People are aware about it. So many publications we have. I think the highest publication ever had by this committee is under your chairmanship. No doubt, sir, you are leading from the front. Our learned speaker as well as our past person, whether it should say immediate past person, Sri Atul Gupta ji. Good evening to you, sir, and all the participants. The task which is given to me is to introduce the topic first and then the speaker. So let me take 2 minutes each for doing this. When Atul Gupta ji himself is speaking on the topic, no introduction is required. Although one line I can say about the input tax credit, it is the backbone of the entire GST system. The entire GST system is surviving on the input tax credit only. It is known as value added tax. Since it was named as value added tax something else in our country, we named it GST. Otherwise, worldwide it is known as value added tax, and value added tax can be achieved only by the input tax credit system. So the entire GST system is working in and around the input tax credit system, which will be discussed by none other than our past person. It is honor for the committee, rather it is honor for all the participants also, that past person is speaking on a topic, technical topic. We welcome Sri Atul Gupta ji, a staunch leader, has raised to the highest echelon of the accounting profession to acquire position of the President of the Institute of Chartered Accountants of India in the year 2020-21. The second largest accounting body in the world after serving as a vice president in the year 1920. He served accountancy profession for more than 2 decades and is widely respected for his strong organizational skill and deep insight of the affairs of the profession. A commerce and law graduate by education, he served as a chairman of Digital Accounting Assurance Board, Board of Studies, IT Committee, Indirect Tax Committee, this GST committee earlier known as Indirect Tax Committee. Under his stewardship at Board of Studies, the new scheme of education and training of ICAI was benchmarked and revised international education standards was launched in 2017 by none other than our Prime Minister, Mr. Narendra Modi. With deep interest in research, he is credited for project of preparation of accrual-based financial statement of Indian Railways, third largest railways of world, under the ambit of Accounting Research Foundation. He has also been chairman of ICAI Accounting Research Foundation and Extensible Business Reporting Language, that is XBRL. He has also been director of the governing body of Indian Institute of Insolvency Professionals and registered valuer organizations. Friends, on international front, he is on the board of IFAC, that is International Federation of Accountants, XBRL International and South Asian Federation Accountants, that is SAFA, and representing ICAI in International Integrated Reporting Council, IIRA, RC. He earlier has been chairman of the Committee on Education and Training and CPD of SAFA. Being thoroughly conversant with the professional concerns and demands of his time, C.A. Gupta has authored many relevant books and has published numerous articles in the leading newspapers, magazines, and professional newsletters, and delivered lectures in about 1,500 seminar and conference. Friends, I also want to inform all of you, he is thorough professional and expert of GST now. And although he is speaking after 2 years, but you will feel that he never missed the topic, he never missed the study. Friends, I want to inform all the participants that today just to hear Atul Gupta, we got more than 6,000 plus registration. It is itself a record in ICAI history. We salute to you, sir. And with these words, I welcome C. Atul Gupta, our past president, for the today's lecture or today's discussion on today's topic, that is input tax credit. Over to CA Atul Gupta. Thank you.
Sir, you're on mute, sir.
I believe now it's audible.
Yes, sir. Yes, sir.
So, thank you, Sushil Bhai, and very respected Chairman of Indirect Taxes Committee of GST and Indirect Taxes Committee of ICAI, CA Rajinder Kumar ji, who is an elder brother to me in the council, and he's always giving a lot of blessings and support to me, even as a Vice President and President, for all the initiative taken by the ICAI. And the Sushil Bhai, again, a very, very important pillar of the profession and a great contributor. Even when we started the Board of Studies initiative on the 1st of July 2017 with a new scheme, I will always cherish the contribution made by Sushil Bhai when we started the first ever, under his guidance, the direct dispatch scheme, wherein the students and members start getting the material at home by clicking click on mouse from the ICAI platform. Respected colleagues from the Indirect Taxes Committee, Smita ji, Ajay ji, and the distinguished participants and the audience of the from the profession. At the outset, I am thankful to the committee, the chairman and vice chairman, for giving me this opportunity after a 2 years self-imposed exile, that I will not be speaking on the topic, since there were a lot of responsibilities were there to see that how we can contribute in the profession. And now coming back to the main stream of the discussion, which I cherish all the times to speak and deliberate at the different occasion. Now, friends, the today topic is input tax credit, and is being rightly mentioned by our honorable worthy chairman that the topic is so big that we may discuss for hours and hours, even for a day, on the various aspects of the ITC. But I tried to create around 60 such slides, which I try to summarize the entire input tax credit aspect related to GST. Before I speak, as being rightly mentioned by Sushil Bhai also, that the backbone of the entire value-added tax system is the input tax credit. That is because this tax is a value-added based tax. So, say for example, I am buying for 100 rupees and selling for 150 rupees, and I am supposed to charge the tax on 150 rupees. It is the tax which I have paid on the 100 rupees will be made available to me as an input tax credit. And that is exactly we are going to discuss between all of us, because the government intention is only to charge the tax on the value addition at every in the entire chain of the from the entire product life cycle. That only the government is looking for a value tax on the value addition at every stage. So friends, how this 100 rupees will be available, what will be the challenges, what kind of a records we should maintain, what kind of a precaution we should have, what is the formula to calculate all this credit of rupees 100, is something that we are going to discuss today in this around 2 hours deliberation. I will try to see that we should be speaking for around 1.5 hours, and then last 15 minutes can be there for the few of the questions. I am aware that we have already received a lot of questions, but all the questions we will not be able to take, but we will try to cover as much as we can. Now, friends, if I speak about the topic which is already being shared, that the GST is being a comprehensive value-added tax system, and to ensure the uninterrupted flow of credit, we are going to discuss all these topics are there, as each stage will require a value addition, and then the credit system should be available. Now, friends, to give you a bird's eye view on the entire entire concept of input tax credit. So there are around 5 sections which involved under the input tax credit aspect under the GST regime. That is the section 16, which talks about the availment, that what are the conditions of availing the credit. And with that, there is a rule 36 and 37, Then in case all the conditions related to availment is there are certain credits which are specifically disallowed, which are not allowed to be claimed, and then there is a reversal of credit in case you are using the credit for the exempted or the nil rated activities are there. Then we have to read with the section 17, and then the very, very important rules 42, 43 and 38 are there. I just wish to draw you that attention that I will be discussing not only the fundamentals of the ITC, I will be sharing with you some practical case studies also. So we will try to have some 1 or 2 questions also in this deliberation, so that more and more clarity to the concepts will be there to all of you. And then we have the section 18 is there, which will be dealing with the special cases. For example, right now I am into the composition scheme and I want to come out from the composition scheme, or in case I am selling the goods in between, like some capital goods are there, and then I am selling that capital goods. And then finally, we will be discussing about the input service distributor concept, that how the credit is can be distributed from the head office or maybe from one branch to another branch. So that is all we are going to discuss in the today's deliberation. Now friends, let us start with the section 16, which will be I am taking about, that is the availment of the input tax credit, read with the rule 36 and 37. So rather than speaking on the sections and reading the language of the section, we have tried ourselves that let us make it simpler in a layman language, so that each one of us will understand very quickly, as compared to I am reading the language of the law, and that will, like, you will say that okay, otherwise also the language of the law is available to me. Now friends, the first section, that is section 16(1), which talks about that whatever the credit is there. For example, you have certain credits which are not related to your business, and then the credit of that will not be available, though you may have incurred the expenses, but that is something personal in nature. So for example, somebody is taking the club membership, then whether the club membership for the individual person, for the partner, director, whether the credit will be available, the answer is no. So what the law is saying, that the goods or services whose credit is to be availed are and used or intended to be used should be in the course or furtherance of business. So that should be in relation to your business only, then only the credit will be available. So first condition is that whatever the credit is available, that should be related to the furtherance or in the course of business. Now, for example, I just take you an example. I have given an example that a company has taken a loan for the higher education of its director's son and has paid the processing charges for the loan. So for example, there is a 50 lakhs rupees higher education loan, and 2% is the charge, meaning thereby 1 lakh rupees is the charge. And on that 18,000 rupees is the GST being paid. So whether this 18,000 will be available as a credit or not. So I just wish to clarify you that since this has nothing to do with the in the course or furtherance of business, the credit of this 18,000 rupees will not be available, which is being paid for the processing fees. Now friends, now coming to the second aspect, that on which the condition that okay, you will be eligible to claim the credit, that you should have a valid invoice. So you should be possessing the tax invoice or any other tax paying document. So it should not be only the invoice. You may have a debit note, credit note, or you may have an invoice you are issuing in case of a reverse charge. So you are aware that when you are receiving certain services, for example, the GTA services, for example, the independent director services, or even the legal services, charge mechanism, you have to pay the tax as a recipient of the services, subject to the other condition. In that case, you are issuing a invoice to self. So in that case, that invoice or the bill of entry, in case there is a custom duties are being, there is a import of goods are there. And then in case you are getting a credit as an input service distributor. So for example, you are a branch office and there is a head office. Head office is transferring the certain credit as a ISD. Then the invoice raised by the head office to you as a branch office to distribute that credit. So you should have the invoice or a valid tax paying document. That should be the second condition to claim the credit. First is that it should be related to your business. The second is that you should be possessing a valid document which should be making you eligible to claim the credit. Now, my dear friends, the point is that because we have given the invoice rules. They have given us the invoice rules that okay, which kind of what kind of a ingredient should be there on an invoice. So we have a separate invoice rules are there where around 16-17 items are being given, that serial number should be there, HSN code should be there. So to be a valid invoice, there are the 16-17 requirements are there. But whether all these 16-17 requirements you have to check to claim an credit, the answer is no. Because they have given us certain kind of a relaxation. They have given under the rule 36 sub rule 2 that no, there is no requirement that each and everything should be there. So I just noted down for a ease, for a diagrammatic presentation I have prepared that with the support of my team that okay, we should be checking only the few out of the all the requirements should be there. So for a valid invoice, generally you have to comply all the requirements, but to claim the credit, minimum requirement which has been given under the rule 36 I am talking about. So serial number not exceeding 16 characters. So whether the invoice should be serially numbered, the answer is no. If the serial number is not there, still you can claim the credit of the invoice. But the name, address and GSTIN number of the supplier should be there. Likewise the recipient. But in case the HSN code is not being mentioned on the invoice, though for a supplier is not a valid invoice, but to claim the credit, it is a valid invoice for you and you can claim the credit. So no worry at all. In case the invoice is not carrying the HSN code, then you should not feel that okay, I will not be able to claim the credit of the same. Description of the goods and services, the answer should be yes. If the quantity is not there, no problem at all. Normally on the service invoice, the quantity will not be there in any case. Then the value, then the taxable value, then the taxable value of the supply of goods, both taking into account discount or abatement, no problem at all. Rate of tax should be there, and then the amount of tax and the place of supply. But in case there are the, for example, the digital signatures of the supplier is not there. So no worry at all. That will be a valid invoice for the purpose of claiming the credit. Now, one new requirement which is recently being introduced, you are aware, that is the QR code. So the QR code requirement is recently being added into the system. So that should be there on the invoice when you are looking for a credit of certain invoice where the QR code is compulsory. So my dear friend, what I am trying to convey you that the first thing I mentioned about you that the invoice should be the expenses should be in relation to your business. The second one is that you should be possessing certain documents which is a valid document in the eye of law, read with the section 16 rule with rule 36(2) that these are the requirements you have to follow to be eligible claimant of the input tax credit. Now my dear friends, moving further. Now we are moving to the next section, that is section 16(2), which talks about that the goods or services have been received by the registered person. So what I am trying to convey you that it is not the case that okay, you have only the invoice. It is that you should have the goods also. So whatever the goods or services which are you are procuring through that particular invoice, you should have received that one as well. So what will happen that we will be discussing, say for example, you are receiving the goods in installment. So unless and until the final installment will not come to you, I have a separate presentation for that, but I will be sharing you. But till the time the final installment of the good is not being received, you are not eligible to claim the credit. So it should not be a case that okay, you have received the invoice, but you have not received the goods or services and you will be eligible to claim. The answer is no. You should have received the invoice and the goods or services which is being mentioned in the invoice, then only you are eligible to claim the credit. And that's why you must have witnessed that there are number of cases which is happening in this in the entire ecosystem when the department is claiming that these are only the invoices. The actual goods are not being transferred from a supplier to the recipient, and that's why they are disallowing the credit based on that particular preamble. Now, for this particular provision, there is one exception as well. Because at times you are not buying the goods for yourself, but for the further supply. So there is a bill to ship to model that, okay, I am buying from Himachal and I am directly supplying to the Calcutta's buyer. In that case, there will be a bill to ship to model. In that case, I will not be receiving the goods at all, but I will be buying the goods from Himachal and requesting the Himachal vendor directly to supply to Sushilji, who is based in Calcutta. In that case, there will be a valid transaction and the goods is not required to be received by me to be an eligible claimant of the input tax credit. So that is being given in the presentation also. So I am not repeating the presentation for the sake of the brevity of the time and to see that we are covering the maximum number of slides which is being developed for the benefit of our colleagues. So this is again same point is there, because this is a new amendment which was introduced later on from the 1st of February 2019, that even apart from the in case of a goods, there are the cases when the services are being rendered on the behalf of somebody else. So in that case also there will be a valid transaction. It is not the case that the person to whom I have billed should receive the services. On his instance, I can render the service to a third person also, and then there will be a valid transaction wherein I have delivered my services, and in that case he will be eligible to claim the credit. Now my dear friend, coming to the next aspect, that is I'm talking about that the other condition. So first condition is that it should be in relation to your business. The second one, you should have the invoice. Number 3, the goods or services should be received. The fourth one is that the tax so charged. So for example, I am rendering an invoice, I am issuing an invoice to Sushil ji. Now I am supplying a goods of rupees 1 lakh to Sushil ji, who is based in Calcutta. I am based in Delhi. So whatever the tax I have charged from Sushil ji should have been deposited into the government exchequer. So unless and until I will not pay, though there will be an argument, there is a one judgment also which I am going to share with you, and there are the questions which are there raised by certain members here already in our the separate link which is being provided, that in case I have paid the tax to the vendor, everything is okay, but he is not depositing, what is my fault? So yes, there are the judgments in the pre-GST regime also, and even post-regime also, that no, the department cannot deny. But normally what is happening, that unless and until that credit is not being reflected in the GSTR 2A in the field formation, the same is not being allowed. So what I am trying to convey you, that the precondition is there, that tax charge on the goods or services have been actually paid to the government. So Atul Gupta, who is raising an invoice to Sushil ji for 1 lakh rupees, the 18,000 rupees related to that invoice should have been paid by me to the government exchequer, and that should be getting reflected in the GSTR 2A to make the Sushil ji eligible to claim the credit of that 18,000 rupees. And the fifth and the last condition under this particular section is that the return prescribed under section 39, meaning thereby GSTR 3B, should have been filed by Atul Gupta. So it is the case that I have filed the, you have filed the return. So you are filing the return. If you have filed your return under this section 39, then only you will be eligible to claim the credit. It is not that you are carrying the credit and you are saying that I am eligible. No, you have to file your regular returns on time. So to in times mean whatever the dates are there, or with the interest penalty, whatever is the case may be, but you are filing your returns, then only you are eligible to claim the credit. Now my dear friend, as I mentioned you that when we discussed about that the goods is actually being received, so there is a one proviso which is clarifying this aspect which I mentioned you, that in case the goods which are sold in lots or in installments. So for example, there are say for example, I am buying the plyboard, and I'm looking for 100 plyboards from somebody, and there is a vehicle, the transport vehicle can carry only the 20 plyboards. The company is saying that every day I will manufacture the 20 plyboards and I will supply you. So it will take around 5 days to deliver all the lots which you are looking for. So what the law is saying, the first proviso to this particular section is saying that in case the goods which are sold in lots or in installments, starting lots are sending lots are sent to the receiver under the cover of the delivery challan, because what will happen, that because the invoice will be sent with the last lot. So what will happen, it will start with the delivery challan. So what the law is saying, that the credit will be available only when the last lot or installment has been received. So as I mentioned you, on the 5th day when I will receive the last lot of 20 plyboards, then only I will be eligible to claim the credit. Before that, I will not be eligible to claim the credit unless and until it is a bill to ship to model. So in the case it is a bill to ship to model, then I will be eligible to claim the credit. Now, my dear friends, there is another aspect which we should discuss, that in case The invoice has been issued by the vendor and ITC has been claimed correspondingly for such invoice, but the material is still in transit, then such credit need to be reversed until the compliance is made. So what I am trying to convey you, that in case I will claim the credit on the first lot is being received and still the other lots are coming, the other installments of the goods are coming, then I have to reverse the credit whatever is being claimed. So what I am giving you a very small example. 29th of September, I received the first lot. I claim the credit immediately on the same day. Now I am using that credit for my output for my GSTR 3B or GSTR 1 on the 20th of October as the case may be. Now actually the other lots I received in the month of October, meaning thereby that based on the last lot which is received on the 10th of October, I should have claimed the credit on the month of October, for the month of October, and to be utilized for my November return. But actually what I did, that I used the credit in the month of September output against my September month output liability and declared the same in the month of October, which is not permissible, and I have to reverse the credit along with the interest for so wrongly being claimed. So what I am trying to convey you, that it is very, very important for all of us to understand this particular aspect. So now, my dear friend, coming to the second proviso of that section 16, because after that we will be practically closing the section 16 and we will be moving to the section 17. So what I am trying to convey you the second proviso, and then I will try to revise the entire section 16 for the benefit of my colleagues here, that the non-payment of tax within 180 days. So what I am trying to convey you, that as per the law under section 16, it is also being clarified for the benefit of the supplier, for the benefit of the small and medium units, industry, even for the practitioners, that if the recipient fails to pay the amount towards the value of the tax, towards the value and the tax, so it is not the 1 lakh rupees. So thereon to the supplier of the goods within 180 days. But I am trying to convey you that, for example, again I am giving an example that 1 lakh rupees supply I have made to the Sushil ji. So from Delhi to Calcutta, I supplied a goods of rupees 1 lakh. Now the Sushil ji, to become eligible to claim the credit of 18,000 rupees, which is there on that particular invoice, he has to pay me this 1 lakh plus 18,000. So it is not the case that he will pay me only the 18,000 rupees and then he will be eligible to claim the credit, or he will pay 1 lakh rupees and then he will be eligible to claim the credit. It is the 1 lakh plus 18,000 rupees Sushil ji has to pay me within 190 days from the date of the invoice, and then only he will be eligible to enjoy the credit which he claimed on that particular day. So what I am trying to convey you, that the moment you are getting the invoice, you are eligible to claim the credit, but you will be able to retain the credit only when you will pay to the service provider or the supplier within 180 days the value of the tax along with the value of the goods along with the tax thereon. And then otherwise you have to reverse the credit. So what will happen? Say for example, on the 1st of January I received the goods and I am invoice and I have not paid by 30th of June to my supplier. In that case, before 30th June, I should reverse the entire credit which I so claimed on the. So friends, I believe that there was a technical glitch. Because of that, we lost around 10 minutes. So we will try to cover up, and even we can extend our time for the overall time from 7 p.m. to cover up the aspect which will not be able to cover. So friends, I believe that you were there on the slide number 9 and I moved to slide number 14, 15. But then I came to know that you are not able to hear. Right now, I believe. Chairman sir, should I continue?
Sir, one way it is, I have also registered, but it is buffering for me. Now it is fine, sir. You can go ahead, sir. Yes, sir. Fine, sir. Fine, sir.
So, Smita ji, should I start?
Yes, sir. Yes, sir. Now audible.
Thank you. So, friends, just to repeat what we discussed till now, that as we are discussing about the eligibility criteria to claim the input tax credit, I discussed with you the 3 criteria. That one is that you should be using that credit, whatever the expenses are there, that should be in relation to your business in the course or furtherance of business. The second one, you should be carrying the valid tax document, that tax invoice or other tax paying document. A valid invoice. Then the third aspect which we discussed, that the goods or services which is there on that particular invoice on which you want to claim the credit, that should have been actually being received by the registered person before claiming the credit. Likewise, it is there for the services. Now friends, the fourth condition which I was discussing when we lost the connection, that whatever the tax is being there. So for example, I am raising an invoice of rupees 1 lakh to Sushil ji in Calcutta. To claim the credit of the same. So there is a controversy which is going on all the times, that since the Sushil ji has paid me 1,18,000 rupees, he has received the goods also, he is having all the other conditions fulfilled. But if the Atul Gupta is not paying 18,000 rupees to the government exchequer, whether the Sushil ji will be eligible, why the Sushil ji should not be eligible to claim the credit? And even I will be discussing a judgment with you in the pre-GST and post-GST regime also, that as per the judgment being pronounced by the honorable courts, that since all the other conditions are being fulfilled, it will be very, I will say, rigorous on the part of the recipient of these services or goods to deny the credit. But nevertheless, the rule is, the section is, the provision is that whatever the tax is being so charged by the supplier should have been actually paid to the government. So this is the fourth condition. And the fifth condition is that the returns prescribed under section 39, that is 3B, the GST or 3B should have been filed by the person who is want to claim the credit. So there are the 5 conditions which I am just summarizing you. The first one is the business and commerce. The expenses should be business and commerce. You should have the invoice, receive the goods, tax is being paid by the supplier, and you are filing your returns on as per the prescribed returns are there. Now, my dear friend, we have the 2 proviso available, which one I have already shared with you. That is the goods you are receiving in installments. So, for example, there are the case when I am looking for certain goods to be received, but the manufacturing capacity is such that I am not able to receive all the goods in one go. So the supplier will send me in the installments. Let us take an example that I am looking for the some kind of a plyboard or something, and I'm looking for say for example the 1000 plyboards I am looking for somebody, and I approach a company which is manufacturing the 200 plyboards in a week. Now what will happen, that he will supply me, he will issue an invoice to me for 1000 plyboards, but will supply me the plyboards, 200 plyboards in a single installment. So what the law is saying, what the provision is saying, that till the time I will not receive the final installment, the final lot of the 200 plyboards, I will not be eligible to claim the credit of the same. And even it goes further to say that in case you will claim the credit at the time of first installment, then you have to reverse the credit unless and until you are really eligible to claim the such credit. So I am giving you an example which I shared with you when this stopped, the system stopped. That say for example 29th of September, I received the first installment and the delivery challan also, and based on that I tried to claim the credit. So for example, the total value is 10 lakh rupees. I claim the credit of 1,80,000 rupees against my output liability of September. For that I am filing the return on the 20th of October. But since I received the final installment in the month of October, that credit should be used only for the October liability, for which I will be filing a return in the month of November, and the September credit so claimed need to be reversed along with the interest. So what I am trying to convey you, that the condition which is being given, which I mentioned on the third part, that you should have received the goods or services, it means that the full possession of the goods and services should be there. The goods received in part will not be acceptable to make you eligible for this purpose of credit. Now, my dear friend, the second proviso which is there under section 16 is very, very important, and normally we are like doing some kind of I will say that we have to be more careful and diligent in this particular part, is that the recipient, the provider from Delhi, and I am providing a service, say for example in Panipat. So whosoever is receiving my services, say for example 1 lakh rupees is the service value, 18,000 rupees is the GST on that. Now the person who is taking my services has to pay me within 180 days not only the value of my service, that is 1 lakh rupees, but also the 18,000. So by paying only 18,000, he will not be eligible to retain that credit. By paying only 1 lakh rupees, that will not make him eligible to retain the credit. It is the value plus tax thereon has to be paid within 180 days to retain the credit so claimed. So say for example, 1st of January, I provided these services. Now before 30th of June, the person, Mr. X has to pay me 1,18,000 rupees to continue the benefit of retaining the credit so claimed on the 1st of January. But in case he is not paying me within 30th of June, then he has to reverse the entire credit so claimed, and then he has to pay the interest also. For example, he is not paying me, and then the credit is also not being reversed. In that case, the gentleman has to reverse the entire credit so claimed on the 1st of January and also pay an interest at the rate of 18%. So it is very, very important for all of us when we are looking for the compliance audit, when we are looking for the checking of the compliances of the GST for one or the other SSC, that we have to see that not only we are fulfilling all the conditions, that the invoice is there, invoice is carrying all the ingredients, the credit is related to my business, the goods or services are being received. We have to see as well that the payment is being made to the service provider or to the supplier within 180 days from the date of invoice. So let us have some kind of examples and the exceptions for this provision as well. So this provision of 180 days has the 3 exceptions, wherein the first exception is that where I am paying the tax under reverse charge. So for example, I am paying the tax for the advocate services or for the GTA services, wherein myself is paying the tax on a reverse charge basis. Then whether I am paying to the GTA within 180 days or not will not matter. And in that case, I will be eligible to retain the credit even if I will not pay within 180 days to the service provider. The second one is the supply is made for the known consideration. What is this? Because you are aware we have a schedule 1 with the section 7 which talks about the 5 type of services, 5 type of activity, wherein even if there is a no consideration, then also the activity will be treated as supply. I give you one example. I purchased a laptop for rupees 1 lakh and 18,000 rupees was the GST on which I claimed as a credit. It's audible because I'm getting a call that the voice is breaking a lot. Hello? Mitaji?
Now it is fine, sir. There was issue for a few minutes. Now it is fine. You can go ahead.
Okay. So what I'm mentioning you that the supply is made for the known consideration. So I was given an example that suppose I purchased a laptop rupees 1 lakh and 18,000 rupees was the input tax credit on the same. But later on, after 2 years, I want to gift that laptop to one of my employee. In that case, as per the schedule 1, that will be treated as a supply even if I am not charging anything from my employee. Because I claim the 18,000 rupees as the input tax credit, wherein if I am removing that goods as a gift, I am disposing of my the goods as a gift. In that case, that will be treated as my output supply and it is subject to GST. But in that case, since there is no consideration, there is no provision which 180 days will be applicable. The third one is that the value of supply which has been paid by the recipient on behalf of the supplier, meaning thereby I paid to somebody else. So it is not the case that okay, I should receive in my bank account. For example, I have to pay some money to X and I have to receive the certain money from Y, and then I can request the Y directly to pay to X. So it is not the case that I should be receiving the money in my bank account, then only the recipient will be eligible to claim the credit. The recipient has to pay either to me or on my behalf to somebody else. Then also the recipient will be eligible to claim the credit. So is there in this particular question. So now let us explore with some illustration so that it will clarify us the more the entire aspect, and because we will be moving to the section 17. I'm just sharing you the 2 examples and then we will move to the section 17. Now A purchased the goods for rupees 1 lakh plus 18,000 is the GST, and on the 1st of March 2019 received the goods also, invoice on the same date, and claim the credit as well for the month of March. But he paid the paid against that bill to Mr. Y on the 1st of December. Now from 1st of March, if you will calculate March, April, May, retain which is not an eligible legitimate credit, meaning thereby the person has to reverse the credit along with the interest. Now what will happen that as they are being given in the illustration, that the person which was supposed to reverse the credit, then there will be an interest liability which is being given in this particular illustration. Same way, for example, just to share with you that what will happen. So what is this? That okay, I reverse the credit, this 18,000 rupees plus whatever the interest was there, I reverse that. Now I paid the amount on the 1st of December. So can I reclaim the credit which I reversed? The answer is yes. So the answer is that once the credit is being reversed, then the same can be reclaimed the moment you will pay to the supplier. And in that case, when I have to pay, whether there is any time limit, that okay, I have to reclaim the credit, the answer is no. Because normally you are aware that we have a condition to claim the credit before the 30th September or the date of filing of annual return, whichever is earlier. But for this type of credit, when you are reclaiming, once you have claimed, you reversed, and now you want to reclaim, there is no time limit which is being prescribed as being given in this particular illustration. Again, let us have an illustration that the A received certain goods on the 1st of Feb, invoice dated 31st of January, credit available on the 2nd of Feb. Now the A paid 50% of that, 1,18,000 to B on 31st of March, 59% he never paid, right now also not being paid. So what kind of a reversal will be there as I being given? That the 59,000 he can retain, 59,000 he has to reverse, and then he has to pay the interest. And now whenever he will pay, he will be eligible to reclaim the credit, so not so reversed because of this particular calculation. Now friends, there is another provision under section 16 which we should be discussing, but this is an old provision which was there in the service tax regime also, that in case you are buying certain capital goods, so you purchase a capital goods rupees 1 lakh along with the CGST or the IGST or whatever the duties are there for rupees 10,000, and you capitalize the capital goods not only with the value but also with the tax value, meaning thereby you are capitalizing the capital goods for the 1,10,000 rather than 1 lakh. In that case, there will not be any credit which will be available. So I mentioned that if the depreciation is charged on rupees 1 lakh, ITC will be available. But if the depreciation is charged on the 1,10,000 rupees, then the ITC will not be available. Now, my dear friend, we have one or two more provisions in the section 16. Again, this is again eligibility, which I have recently just clarified, that the eligibility to claim the credit, when up to when I can claim the credit. So the credit which is once claimed, reversed, then the reclaim, there is no time limit is there. But in case it is a fresh claim, then it is very, very important that they have given under section 16(4) that you have to claim the credit on the due date for the month of September. The due date under section 39 for the month of September or the date of furnishing of annual return, whichever is earlier. So as I mentioned you, the credit can be availed earlier off. So that is the 30th September for the September month. The due date normally for the under section 39 is 20th of October or the date of filing of annual return. So let us take an example. The invoice date is 1st of August 2018. The annual return filed on the 30th of September 2019. So what I am trying to convey you, the credit for this invoice can be availed up to the date of the return for the month of September, that is 20th of October. So the 20th October or 30th October, whichever is earlier, will be the last date when you can claim the credit for the invoice which relates to the financial year 18-19. So my dear friend, it is very, very important to note down by all of us that all the invoices related to a particular financial year, the last date for the first claim is the 20th of October. Normally, I'm just giving you the date. It is not the 20th of October. It is actually, which is being given in the law, the due date for filing of the September return. But normally it is 20th of October. That the 20th of October is the last date when I can claim the credit of all the invoices pertaining to the last financial year. So this is very, very important to note down by all of us. Now, just whatever we have discussed by the section 16. So let us rehearse, let us revise what we have discussed in the section 16 by these last 18 slides. So a quick test for all of us. A is a supplier registered in Delhi. He is receiving various goods and services. So let us analyze for the month of September, which invoice will be a valid invoice for the claiming the credit. Goods worth rupees 1 lakh, GST paid 18,000 rupees directly sent to by Mr. A from B's premises on the direction of Mr. C. So it is a bill to ship to model. Goods are not being received to me. But whether I am eligible to claim the credit, the tick mark is there. Yes, I am eligible to claim the credit. Now another example, another case, the service worth rupees 2 lakh received. HSN is not mentioned in the invoice. Though if the HSN is a precondition to raise an invoice, but as I mentioned you, that they have given us a proviso, they have given a specific benefit to the recipient to claim the credit even if the HSN number is not being mentioned on the invoice. So what I am trying to say, again the tick, the 36,000 credit will be available even if the invoice is not carrying the HSN code. The third one, the goods worth rupees 50,000, GST is 9,000, has been purchased from Mr. X and is handed over to the transporter for bringing it to place to Mr. A on the 20th September and received in the premises on the 3rd of October, meaning thereby the invoice, the goods dispatched on 20th of September, received on the 3rd of October. So whether I can claim the credit for the month of September liability? The answer is no. I will be eligible to claim the credit based on the 3rd October when I received the goods rather than with the when it was being invoiced. So invoiced 28th September, received on 3rd of October. I will be using this for the return I am filing in the month of November for my October 2018 liability rather than September. The next one is the legal services has been taken from the lawyer on the 18th of Feb for rupees 60,000. Paid the tax on the 20th of March. 18th Feb is the service received. 20th March tax paid. The credit availed. The payment to the lawyer is not being made. So what will happen? As I mentioned you, the 180 days condition is there. Payment is not being made. But there were 3 exceptions. That in case when the services are being received under RCM, the Schedule 1 and there is a like a bill to ship to, like somebody paid on my behalf. So this is a case of a RCM wherein I paid the tax. So meaning thereby, as per the 16.2, I have a duty paying document available with me. That is the challan of the RCM or the self-raised invoice is available to me with me. So based on that, I will be eligible to claim the credit. Again, a tick mark for 10,800 rupees. And finally, the goods worth rupees 80,000 on which the GST was 14,400 purchased, invoice raised on 27th of March, credit availed on 7th of June. The payment is not made till date. So what will happen? I must have claimed in the month of March the credit of those invoice, the credit of credit availed on the 7th of June. But in the month of September, I have to see the 6 months from the date of invoice. So if I have not paid before the 27th of September, in the month of September, I have to create the output liability of rupees 14,400 as a reversal of my credit, and that is something along with the interest I have to pay while I am filing the return for the September. So this is something, friends, which I wish to discuss with you in the as far as the section 16 is concerned. This is again an exercise which we develop for the benefit of our audience, our participants of this program. And as you are aware that as I mentioned you, the GSTR 2A 2B mandate requirement is there. Now the department is saying that you can only claim the credit once it is being reflected in the 2A, for which there are number of litigations are going on. Now, my dear friend, there is another condition which is being imposed for the eligibility of the credit, which is always being taken as a controversial provision. But nevertheless, whatever is there in the law, we have to study and comply with. That is Rule 36 Subrule 4. Now, this Rule 36 Subrule 4 was originally being introduced in the 2019. Later on, it is being amended in the 2020 and then finally now in the 2021. So, what I am trying to convey you that initially this provision was there. that in case there are certain credits which are not being uploaded by the supplier under the GSTR 1. So there are the certain services or goods you have received, you paid, everything is there, but that the supplier has not filed his GSTR 1. In that case, whatever the credit is there, no problem at, like whatever you may have n number of credits is there, but they have specified a maximum limit of 20% which you can claim as a eligible credit. But that 20% which was there in initially substituted by 10% in 2019, and then from the 1st of January 2021 it is being restricted to 5%. So what I am trying to convey you that there will be two class of credit. One class of credit which is fulfilling all the conditions, and even the supplier has also submitted his GSTR 1. Then there is no restriction. You can claim the entire credit, whatever the eligible credit is there based on the other conditions. But in case there is a second class of credit wherein the GSTR 1 is not being filed by the supplier, then out of the total quantum which is available for that particular class, you can claim only the 5% of the eligible credit till the time the supplier will not upload the GSTR 1. So this is something the government is looking to see the self-compliance environment wherein both the service provider and service receivers are complying with the provision rather than somebody is owning that responsibility. My only point is that it will always create an environment when you will be looking for only the trustworthy suppliers as compared to the supplier which is not very well known to each one of us. So this is all, and I just wish to share with you that this restriction which we are talking about, the 5%, is irrespective. So number one, that it is not the case that 5% is applicable universally on all the credits. As I mentioned you, there will be the two class of credit. One is wherein all the conditions are fulfilled. The another is that wherein the GSTR 1 is not being filed. But in the 5% also, when you are calculating this 5%, it will be only the eligible credit. So for example, there are certain restricted credit used for personal purpose, this, that, something. So after deducting that, whatever is there, then only you will calculate this 5%. And then that is something on all the three type of taxes. So the credits, CGST, SGST and IGST separately. So it will not be a case that you will pool the entire credit and then calculate 5%. It will be the 5% of the CGST, 5% of the SGST and the 5% of the IGST which will be eligible to claim in spite of the GSTR 1 is not being filed by the sub. So now I'm moving to the section 17 wherein I have received the confirmation that it's working. So friends, let us move to the section 17 because we are now running short of the time, and let us see that how quickly we can conclude, because though it's a lockdown situation, everybody is at home only, but maybe we have the different challenges in this pandemic environment. Now, friends, for the section 17, there are the number of aspects which we are going to discuss. That there will be certain goods or services which are used for the non-business purpose. We have to remove that, we have to discard or we have to reject that credit. There will be certain credit which will be used for taxable supply, exempt supply, zero rated supply, nil rated supply. So how to apportion that credit. Then there will be certain values that we have to include in the exempt supply. So what kind of inclusions will be there in the exempt supply. And then there are specific provision for the banking companies, NBFCs. We have a section 17.5 which talks about the block credit for which the credit is not available. So all these things we are going to discuss in the section 17. A friend, that as I mentioned you, that in case we have certain credits, so be prepared that I am going to ask you some practical questions here, and we will try to solve one or two case studies also, so that it will give a more clarity to each one of you. Now, my dear friend, that there are the certain credits available with me. Some are business credit, some are non-business credit. Again, I am giving an example that the directors taken a club membership fees, which is not related to the business purpose. In that case, that will be treated as other purposes and the ITC will not be available. But in case the credit is in relation to the business, then the ITC will be available. So the first condition, as that we witnessed in the section 16 also, the eligibility that credit should be in the course or furtherance of business. The non-business purpose credit will not be available. This is again been reiterated in this particular provision. Now, my dear friend, when we talk about the section 17.2 and read with the rule 42 and 43, where the calculation part is being given, what the section is saying, that in case you have certain credits which are being used partially for the taxable and partially for the exempt supply, in that case, you will be taken credit only that relates to your taxable business. So now there will be the 5 class of credits. Say for example, there are the purely taxable supply. So Atul Gupta is rendering the chartered accountant service. It's purely taxable. So 100% credit will be available. But in case I'm doing certain exports, in that case, that will be called as a 0 rated supply. And again, the 100% credit will be available. But in case I am rendering certain services, say for example, advocate services, in that case, that will be a non-taxable or the exempt supply, and the credit will not be available. So there are the 2 aspects where the credit is fully available, taxable supply and 0 rated supply. There are the 3 aspects where the credit is not available, non-taxable supply, which is not taxable at all, meaning thereby, say for example, the schedule 3, the exempt supply, which are there under notification number 12/2017, and the nil rated supply. So I'm not talking about the 0 rated, it is a nil rated. In that case, the credit will not be available. So now in case a business is there, which is having both the type of supplies. They have the taxable supply, they have the exempt supply. In that case, how the credit will be available, calculation of the credit will be there. What amount of the credit which will be available is we are going to discuss through an illustration. But before that, let us understand some of the aspects, because that will help you to deal with that practical case study. Now the exempt supply, the definition of the exempt supply is given under the law itself. So you are aware that I am not repeating the definition for the sake of brevity of the time, that the supply which have been exempted under the notification, or they attracts the nil rate. So that is being treated as exempt supply. But herein we should be discussing the certain supplies which will fall under the category of the exempt supply. And that will be important to calculate the proportion of the credit which will be available. So when you are going for a formula, that how much is taxable, how much is the total supply, or how much is the exempt supply, what will fall under the exempt, what will fall under the taxable, that is something we should learn. Now in that category, the first is the outward supply on which the recipient is liable to pay the tax under the reverse charge. Meaning thereby, if I am a GTA and my entire tax has to be paid by the recipient, in that case, as a GTA, that will be my exempt supply on which somebody else is paying the tax. The second one is that I am dealing in the shares. I am dealing in the shares, securities, I am dealing in the shares, stocks and all. So say for example, I sold the securities for 100 crore. I purchased for 99.3 crores. So there is a 70 lakhs rupees surplus which is there to me. But whether that will be treated as so what will be my turnover as far, because the securities are not subject to GST. So whether the 100 crore will be treated as a exempt supply or it will be 99.3. No, it will be only the 1% of the sale value. Meaning thereby, irrespective of the profit margin, it will be the 1 crore out of this 100 crore that will be treated as my exempt supply. The sale of land, because the sale of land will not be subject to GST, but they are saying for the purpose of what will be the value of the land. So they are saying that for the purpose of the paying the stamp duty, whatever value you have taken for the sale of land, that will be treated as exempt supply. And same way the sale of building, because you are aware that we have a abatement system, we have a reduction in the value system. So they are saying that the sale of building subject to the para 5B, which you are aware about the schedule 2, which talks about the constructed under construction property and the builder's business is there. So whatever the value is being treated as for the purpose of paying the stamp duty, that will be that based on that calculation, the sale of the building will have a exempted portion. And then there will be certain values which will not be treated as exempt supply. Say for example, the NBFCs, the value of services for accepting deposit, extending loans, so whatever like the services you are providing, that will not be treated as exempt supply, though you are not paying the tax. And as well as the value of services by way of transportation of goods by vessels from a custom station to a place outside India. So this is something that will not be treated as an exempt supply as we have given. Now, my dear friend, before I go for this NBFC slide, let me take you to the illustration first, and then so let me complete this only, because we have the 17.5 also to understand before we are dealing with the practical question. Now for the NBFCs 17.4, so we have discussed the 17.3 that is 17.2 we have discussed, and then 17.3 also we discussed that what will be included in the exempt supply. and all. But now coming to the 17.4, which talks about the NBFCs, because the NBFC will have the two options, either to go with the 17.2, that they will go for this calculation of taxable or vis-a-vis non-taxable supply, or they can go straight away a 50% formula. So what they can do that whatever the credit is available to them, they will claim the 50% and they will reverse the 50%. But before calculating this 50%, there are certain benefits which is available to them, that in case they are doing a branch transfer services. So the Kotak Mahindra Bank is rendering the X Bank is rendering the services from CPE to Gurgaon, and they are charging themselves between the branch. So that will not fall this 50-50, that will be 100% available. So that is being given under this particular provision. And once exercised, like you are looking for option 1 or option 2, that you have to follow in the full financial year. It will not be a case that month to month basis you will change the option which you are using for the purpose of the NBFCs. Now, my dear friend, before I move to the practical illustration, let us take you to the very, very important provision of section 17.5, which deals with the block credit. So what I'm trying to convey you that there are certain type of credits which are specifically blocked under the GST regime, for which the credit will not be available. Though there are again litigations going on, and there are different judgments which I am going to share with you. That, for example, the motor vehicle. So in case you are taking a motor vehicle for the transport of passengers, up to 13%. So if it is beyond 13%, the credit will be available. But in case it is up to 13%, so meaning thereby if you are taking a bus for your employees for the then it will be available. But in case the vehicle is, say for example, a 4-wheeler is there, a car is there, the credit of the car will not be available to you except when you are using that car for a further supply. Meaning thereby you are buying the car, you are selling the car, you will be eligible to claim the credit. You are using that car for the transport of passengers. For example, you are running a Ola or Uber cab, then you will be eligible. Or you are running a training college, you are running a motor driving training college. In that case also the credit will be available. But otherwise, as a Atul Gupta, if I buy a car for my chartered accountant service, I will not be eligible to claim the credit of that car as given in the section 17 subsection 5. Now, my dear friend, same way it is for the vessels. So I skip that and now move to the another aspect, that is not only the purchase of vehicle. It is not only the purchase of vehicle which is disallowed for the car, even it is a general insurance, servicing, repair and maintenance related to this particular vehicle or the vessels is there. That also will not be eligible. So it is not only the purchase of vehicle which is disallowed, it is the maintenance charges, whatever you are paying for the car will not be eligible unless and until you are using the car for these purposes, or the vehicle is for more than 13%. So then only the credit will be available. Now, my dear friend, there will be, as I mentioned you, there will be the another block credits are there. That is, for example, you are incurring certain expenses on the food and beverages. There are certain expenses for the outdoor catering you are using. There are the beauty treatment or health service or a life insurance services, or the leasing, renting, or some hiring of motor vehicle is there. So you are taking certain rent a cab or something. Then also the credit will not be available. Now, my dear friend, as I mentioned you that there are certain exception of this. Say for example, I am running a hotel. I am running a chain of food chain is there. In that case, if I am taking certain services, which is also my outward supply. So what I am trying to use, say for example, I am an outdoor caterer. I am the company X is there. I am taking the outdoor catering services for my employees. The credit will not be available. But if my left hand and right hand both are same, meaning thereby I am receiving the outdoor catering service and I am also providing the outdoor catering services, in that case, the credit of this purchase will be available to me for meeting my output liability. So it is very, very important, whether it is a beauty treatment, whether it is outdoor catering, that the credit of the, so if I am using these all above for making my outward supply service of the same category as an element of, or as an element of composite or a mixed supply. So what they are trying to convey you. For example, I give you another example. So I am buying certain outdoor catering. Say for example, I got some cake or something ready-made. I purchased some cake, and then on the cake, I use some toppings and everything. I do some designing and all these things. And then I'm selling that cake as a composite supply or as a mixed supply, then the purchase of that cake, the credit on the purchase of that cake will be available to me. So whether I'm selling the cake as it is or I'm selling the cake as a composite supply or a mixed supply, then also the credit will be available to me. So it is very, very important for all of us that we should not be using these credit unless and until we are into the same line of business. It is very important for all of us to see that our associates to whom we are dealing with is not using this. Same way, the membership of club or even the travel benefit extended to employees for the LTC. So all these credits are not available. So my request to all of you, let us revise ourselves, because the motor vehicles, there are these class of activities wherein the credit is not available. The membership of club, the travel benefits, all these things are there where the credits are not available. Now moving further, the construction. So for example, I'm getting constructed my office, the credit will be available. The answer is no. In case I'm taking any construction services and for which I want to claim the credit will not be available. The credit will be available only and only when I'm also in the same line of business. So for example, I'm taking the works contract service and I'm also providing the works contract services. Then only I will be eligible. So let us say I'm a builder or I'm booking certain flats or certain residential flats or certain shops are there which I am getting constructed from a works contractor, and then I'm taking the advances. So what I'm doing a builder services which is falling under the works contract service. So my output liability is under the works contract and I'm also taking the works contract service. Then the credit of the works contract service which I'm using to develop that building, I will be eligible to claim the credit. But in case I am getting constructed the property for my own purpose, for my own office, in that case, even if it is being used for the office purpose or furtherance of business purpose, then also the credit will not be available. Same way the renovation, same way the addition or alteration, which is being given as a part of the construction property, construction only. So under the definition, the construction includes the reconstruction, renovation, addition, alteration, or even the repair for the purpose of the capitalization. And then they have given the certain aspect which how they will define the plant and machine, because the credit on the plant and machinery is available. So they have given that what will fall under the plant and machinery, what will not fall under the plant and machinery. And accordingly, we have to see very, very carefully whether this particular expenses will fall under the definition of a block expenditure or block credit or not. Likewise, there are 5 other instances are there when the credit is not available. In case you are dealing in a composition scheme, you are not eligible to claim the credit. In case the goods or services are both received by a non-resident, then the credit is not available. Then used for a personal consumption, which we have discussed. There are the cases when the goods are lost, stolen, destroyed. So there is a normal loss, there is an abnormal loss. We studied in the time of costing paper that there are the normal loss, there are the abnormal loss. So if the normal loss is there, for example, the natural evaporation is there. I purchased the petroleum, say for example, though the petroleum products are not falling under the GST, but they have a property of getting evaporated, a certain percentage. So if I buy the 100 liter of oil and which is the 19 and later on when I used maybe after a month or so, that become only the 99 liter because of the natural evaporation exercise is going on, I will be eligible to claim the credit on the entire 100 liter. But in case there is abnormal loss, that 20 liters spillage is there, destroyed something or something stolen, in that case, I will be eligible to claim only for the 80 liter rather than the 100 liter. And then something I paying as a caution, like the department is coming to me, they are saying that there is a malified intention, there is a confiscation of goods, and in that case, I am paying certain taxes, and that tax will not be available as a credit. So my dear friends, before I move to take you in the illustration part or a case study part, let me revise. So the motor vehicle, as I clarified you, the credit which will be available, which will not be available. Then we discussed about the repair part, that the credit will not be available. We discussed certain 5 type of services wherein the credit will not be available, club, and then added club and travel. We discussed about the works contract service, construction service, renovation services, wherein the credit will be restricted, and then composition, and then the lost goods or the personal consumption, everything is there wherein they all fall under the block credit, that is 17.5, wherein the credit will not be available. So what I'm trying to convey you, that whenever we are whenever we are developing the ITC register, So I'm just wish to convey you that whenever there will be a department audit or inquiry is there, the first document the department should be looking for is the ITC register. But the ITC register which we understand that we will print out, the ledger printouts are there, or the ledger account of the ITC will serve the purpose. The answer is no, because that will not carry the 180 days requirement. That will not be speaking about the GSTR 2A or the GSTR 1 is being filed or not. That will not be carrying about the block credit or something like that. So my request to all my listeners here, that each one of us should see that our SSCs are preparing a well drafted ITC register which will require completing the requirement, and then we should have some kind of a repository system also, so that in the future whenever it is being required, we should be having that register available handy to comply with the law requirement. Friends, before I take you to the practical illustration, because we have a rule 42 which will be dealing about the credits, that you have certain credits available for a taxable and non-taxable, how to claim. So I will be taking you one example of that. But before that, let me take you the around 7 very, very important judgments, wherein in the first judgment, though it pertains to the pre-GST regime, that the ITC deny, wherein the purchaser collect the tax but issue the invoice, but he could not pay. So whether the ITC will be denied, the answer is ITC will not be deniable. Though the provision was there in the earlier service tax regime also, the similarly like for GST, but the judgment is there in the favor of the SSC. Likewise, there are the cases when the wastage are there. So as I mentioned you, the natural evaporation. So what the honorable court is saying, that it will not be that, okay, whenever there will be a wastage, you have to reverse the credit. You have to understand the quantum of loss, and then you have to see whether it is a normal loss or it is an abnormal loss. Ad hoc percentage cannot be adopted. Likewise, for the healthcare service, the medicine supplies to the inpatients, the credit need to be reversed, because that is healthcare services which is exempt under the GST. So you can't say that in patients I will be claiming the input tax credit, though the output liability is exempted. Likewise, the cooperative housing society is not eligible to claim the credit of the lift or elevators, as that will be a part of the construction of the property. Likewise, they have given another judgment which we have collected for the benefit of all of you, that the builders still can claim the ITC on the expenses incurred after the completion certificate is being achieved, subject to the rule 42 and 43, meaning thereby the taxable vis-a-vis the exempt turnover rate. Post completion certificate is being received. Same way for a vehicle which is having a more than 13 person are there, the transportation of employees, the credit will be available, and ITC paid on the lease premium charges on the land part will not be available for the construction of its own building. So these are the few judgments which are recently being pronounced after the GST is being introduced, and that is in relation to the ITC. I try to collate and present before all of you for the benefit of all my respected colleagues. Now, friends, coming to the very, very important area, which is I am very passionate about all this, because it is a practical aspect of the ITC, whatever we have discussed so far. So, as I mentioned you that we have a credit of rupees 10 lakh, and I have a taxable and exempt, both type of business are there. How much credit will be available to me? It is something that we should be discussing. Now, in the rule 42, there are the certain terminologies which are being used, that in case you have a total credit available, say for example, X is there, then the credit related to non-business exclusively for exempt and the block credit under section 17(5) has to be removed. Then the balance credit will be transferred to your credit ledger. So C1 should have a clarity. And as I mentioned you, the 5% calculation will be on the C1. It will not be on the T. So it is very important for all of us when we discuss about the block credit, the credit which is in relation to GSTR 1, which I discussed with you. And then there will be certain credits which will be exclusively for taxable, that is T4. And the common credit will be a portion twice. One for the exempt, and the another one will be for the personal purpose. So then D1, D2, and finally credit which will be available is called as C3. So this is a formula which you are using from the last 3 years. And I believe that you are aware about the calculation part also, how to calculate the C1, how to calculate the C2, and then D1 and D2, and finally the C3, which is available to all of us. So before moving to, before I will take you on this, all slides of this formula, let us have a case, let us have a question before all of us, so that we will be able to calculate exactly the liability. So let us, each one of you try, and in case, because you just note down your answer in each of your copies or the notebook which you are carrying with you, and then we will solve the question. So let us take our break for a minute, just so that you can develop your answer. I just repeat the question first for the benefit of my colleagues. XYZ is having a turnover of rupees 10 crore, out of which 7 crore is taxable, 3 crore is exempt. Total credit which is available for this entire activity is 80 lakhs rupees. Out of this 80 lakhs rupees, 5 lakhs is for personal, 5 lakhs is for warehousing of agriculture produce, 20 lakhs rupees is there for the building material for the construction of office building. The 10 lakhs rupees is there for the works contract service, wherein I also providing the works contract service. The 2 lakhs rupees is for motor vehicle for transportation of passengers. Then the 2 lakhs rupees is there for the food and beverages. 6 lakhs rupees is for the goods stolen, and 20 lakhs rupees is the exclusively taxable activity of rupees 7 crore. Now calculate the credit which will be available to utilize for this month. So over to all of you. Let us devote your time, maybe a minute or so, 2 minutes, and then I will come back to the solution of this particular case study. Sir, so now, no problem at all, sir. Though I have a long material also right now, even before the questions. So friends, let us, so what is your answer? You noted down your answer. Let me solve the answer for you. So now no change in your answer. Whatever you have developed, you have to stick to your answer and see that what is the right answer. Now, my dear friend, the total credit which is available as T, as I given you, is 80 lakhs rupees. The total credit which is available to us is 80 lakhs rupees. Out of that, the credit which is exclusively for the non-business purpose is rupees 5 lakhs. So T1. So T1 is what? The credit which is exclusively for the personal purpose. T2 is the credit which is exclusively for the exempted purpose. T3 is the credit which is block credit. So now I am looking for the T1 is a 5 lakh and the T2 is also rupees 5 lakhs, because my agriculture activity is purely an exempted activity, and whatever the credit is available for rupees 5 lakh for warehousing will not be serve any purpose. It is purely exclusively exempted. So not being used for the taxable activity, meaning thereby the credit will not be available. Now coming to the block credit, that is T1, T3. Now the T3 will have the different figures, because the T3 there are the 3 figures. The 20 lakhs rupees the building material, the 2 lakhs rupees is the food and beverages, and the 6 lakhs rupees the goods stolen from the site. So there will be the 3 class of credit which will be falling under the 17.5. As I mentioned you, the 17.5 is a block credit. That is the T3, 20 plus 2 plus 6. So 28 will not be available to me as a 17.5. That is T3. So what will happen? The eligible credit for the first level, that will be there in my electronic ledger, will be the C1, and that will be the 80 minus T1 plus T2 plus T3. That is 5 plus 5 plus 28. That is 42 lakhs rupees. Meaning thereby I have to reverse the 38 lakhs rupees from on account of the T1, T2 and T3. Now this is a 42 lakhs rupees credit, first instance, first strength, on the first level it is available to me. Now out of this 42 lakhs, as I discussed with you, the 20 lakhs rupees is the credit which is exclusively for taxable purpose. That is for 7 crore rupees. So there is no reversal required, no ratio formula is required. So that will be called as a T4, and this 20 lakhs rupees will be 100% available to me, being this is a exclusively taxable credit. Now what will be the common credit? Out of this 42 lakhs, 20 lakhs is exclusively taxable. The 22 lakhs is the credit which is a common credit for the 10 crore for my turnover. So my turnover is 10 crore, 7 crore taxable, 3 crore exempted. So this is my 10 crore and 7 crore and this 3 crore which is exempted and taxable. So what will happen? That 30% I have to reverse from this 22 lakhs rupees, whatever we have calculated. So 22 lakhs rupees is the common credit, and then we will calculate the D1, and D1 formula is, that is the E oblique F, that is exempted turnover divided by total turnover multiplied by C2, and C2 we calculated as a common credit, that is 22 lakhs rupees divided by multiplied by 3 divided by 10, that is 6,60,000. Now my dear friend, normally what kind of a due diligence which is required on the part of our member, that again there is a reversal on account of the D2. So it is not the D1 only. We should calculate the D2 also, and that is a non-business purpose. So in case somebody is having such a business is there, they are saying out of the common credit, please reverse 5% as a non-business credit, and that is given under this rule 42 clause J. I request each one of you, you go back to your places and see the book, and you will find a specific insertion is there for the D2, that is the 5% of the C2, meaning thereby 22 lakhs 5% is 1,10,000. So what will happen, that the common credit which was 22 lakhs, I will be eligible to claim only the 14.30 lakhs. I have to reverse the D1 plus D2 out of the C2, and that will be called as a C3. So C3 will be 14.30. T4 is 20 lakhs. The total credit eligible out of this 80 lakhs rupees, which I shared with you, is only that I will be eligible to claim only the 34.30 lakhs, which is eligible credit as per the rule 42 of the CGST rules. So what, dear friends, so maybe what are you feeling? I'm not aware like how you are feeling when you have what is the right answer on your part. So maybe how many of you have the right answer? Since it is a virtual seminar, so I cannot request you to raise your hands that how many have the right answer. But it is only an introspection, matter of introspection for all of us, that how good we have prepared ourselves for the compliance of the GST. Now, my dear friends, same way there is a provision for the input tax credit in case of a capital goods. There is a rule 43 again, which talks about that. In case you are claiming the depreciation, the credit will not be available. But in case we are not claiming the depreciation on the duty part, and that case the duty will be eligible to claim as credit. So this is something that we have discussed. But again, there are the comprehensive formula. So Chairman Saab, will you like to share, should I cover the rest of the topic or again take an example of this? Because this will again take maybe whatever the Chairman Sir will guide us. Accordingly, I can take up this particular aspect. So, my dear friend, again, there is a case that in case we have the capital goods, so capital goods will be always of a three class. The capital goods which are used exclusively for the taxable business, there will be the capital goods being used for common purpose, that is taxable and exempted business, and there will be a class of asset, capital goods which are exclusively used for the non-business purpose. And for that, they have given us the formula. What I will do better will be that I will share you this slide illustration to all of you so that you can work as per your own purpose. I have given you the different kind of assets, and you have to calculate the credit for the April 2021, which I have calculated here, that how to calculate this. So there are the two aspects. I'm just giving you the answer so that you can understand better, that this is a common credit attributable for the exempted supply for this month. So out of this 30,000 credit which is available, the 527 required to be reversed, plus 6,000 rupees output liability will also be there. So when you are looking for this answer, please remember these are the two answers, the 6,000 reversal and then this 527 rupees 66 paisa reversal is there. So you should be you will be able to handle this kind of a question. Now, my dear friend, I move to the section 18 of the CGST Act, which is dealing about the special circumstances when I claim the credit, I wish to claim the credit, and what will happen, for example, there are the four specific instances which we have given here, that the person first time become liable to take the registration, or somebody is taking a voluntary registration. Somebody ceased to pay tax under the composition scheme and now wish to move to the normal scheme, or somebody was supplying the activities, doing some activities which were exempted earlier and now become the taxable after a particular date. So how you will be able to claim the credit of the same, what kind of a credit will be available, given under the section 18. So in case you are first time becoming the liable to take the registration, you will be eligible for an immediate proceeding from for example, you are taking a registration on 24th of say May. So any credit available up to 23rd of May will be available, but it is only for the inputs. Inputs means input and input services. It is not talking about the capital goods. The same way for the voluntary registration also. But in case of a composition dealer looking to migrate himself into the normal dealer,
in that case, he will be eligible to claim the credit of the capital goods also. But for the formula of capital goods, you have to go back to this calculation part that, okay, how much credit will be really available in that particular case. We have given illustration also that how you will be able to calculate the capital goods for credit, which will be available to you subject to, because they have given us each capital goods will have a life of 5 years, meaning thereby 5% per quarter is required to be reversed. So that is something that we have captured here for the benefit of my colleagues so that they will be able to handle this kind of a challenge. Now, another aspect is there that whenever you are looking for this kind of a credit for the section 18 you have to file ITC 01 within 30 days. And in case that ITC 01 is carrying a credit of more than rupees 2 lakhs, then a certificate from a chartered accountant will be required. So this is something that is very, very important for all of us to note down, that in case you are having a new SSC, wish to take the registration first time, or migrating from a composition scheme to a normal scheme, then what kind of compliances one has to see for claiming the credit. That is something that we need to deliberate. Same way, there are the cases of a sales, merger, demergers, or transfer of business. Then also the ITC 02 is there, wherein the chartered accountant certificate is required to claim the input tax credit, which is lying in the erstwhile company to a new company. Friends, likewise, there are the cases when registered person become the composite taxpayer. Somebody is moving from a normal to a composite taxpayer. Somebody is rendering the taxable services, later on become a exempted services because of the notification came for the exemption. In that case, one has to reverse the credit, and for that there is a ITC 03. To claim the credit, it was ITC 01 and 02, and for reversal of the credit, it is ITC 03, and again to be certified by a chartered accountant to reverse the credit so claimed, but now you are not liable for your output liability, so you will please reverse the credit whatever is lying with you on the day of this options so claimed. So friend, this was there. Again, how to calculate, because at times you will have a certain capital goods. So I just take you one example that because we have a very short time available to take some questions. Maybe chairman sir or vice chairman sir will take some questions, or I will take some questions. So what I'm trying to convey you that there will be a case. So for example, you are selling off. So this question I raised you earlier also, that let us say that I have a capital goods of rupees 5 lakhs on which tax paid is 50,000 rupees. And now after 2 years use, I am selling that capital goods for rupees 60,000. So what will happen? I claim the credit of 50,000 rupees. Now every asset has to take a useful caudal life of 5 years, meaning thereby for every quarter I have to see that 5% is my input tax credit. So how many quarters I use this asset? That is January to May for 2 years, meaning thereby I use this asset for around 10 quarters. So the 10 quarters means the 5% per quarter, meaning thereby 50%. That is the 25,000 rupees I am eligible to retain for the use of this machine for 10 quarter. And 50 out of the 50%, that is 25,000 rupees, I have to reverse. But at the same time, they have given us a formula that the sale value of the machinery and the rate applicable on that, and whichever is higher. So you have to pay the tax on the higher of the ITC availed earlier less the 5%, meaning thereby the balance credit which you should have reversed, or the tax on the transaction value, whichever is higher. So on the 60,000 rupees at the rate of 18%, assume the output liability is 10,800. Whereas as per the reversal formula, I should reverse the 25,000. So 10,800 or 25,000, whichever is higher, is a tax which I have to reverse. I have to pay to as an output liability to the government exchequer, and that is something we have tried to project here, tried to portray here, that it will be the 25,000 rupees, which will be the right amount which is required to be reverse or pay to the government exchequer by the this particular assessee is there. There is a one exception for this particular formula also, because of the small value of the bricks, molds and dies. They are saying rather than the reversal part, because you are taking the credit in the first year itself for rupees goods worth rupees less than 5,000. So you pay on the transaction values only. So there is a exception to this
calculation part, which is there under section 18.6. So we discuss here in the specific aspect which are related to the specific conditions, 18, the special circumstances where the input tax credit has to be claimed or reversed. So first we discuss about the claiming in the 4 conditions, then we discuss about the claiming in a merger case, and then we discuss about the reversal, that okay, you become a composite dealer or your activity become exempted, and then we feel we present a case wherein the goods are being sold, which are being removed, which are being disposed of after being used for a certain period, then how the output liability, the calculation of the tax liability will be there. Now, my dear friends, as far as the banking company is concerned, we have already discussed, so I will not discuss this case study to all of you. Now, moving to the last leg of our discussion, that is the input service distributor. So, as you are aware that the input service distributor is a person who is a supplier and he is receiving certain tax invoice, and that credit is lying unutilized in the hand of the supplier, and then he want to distribute that credit of the input services to its branches or the other regional offices. So in case it's related to goods, you have to transfer the goods as well to transfer the credit. But in case of services, you can transfer the credit only because the services are already being consumed as they are the intangibles in nature. So the input service distributor can distribute the credit in relation to the input services to the various branches and the regional offices, for which there are the certain prescribed manner which is being given under the section of the particular relevant section of the input service distributor, and which talks about that the input service creditor available for distribution shall be distributed in the same manner, same month as shown in the GSTR 6. Ineligible or eligible credit to be distributed separately. So there will be the credit, say for example 17.5 credit is there. There is a fully eligible credit is there, that has to be distributed separately. ISD has to issue an invoice bearing the endorsement of all the invoices which are likely to be distributed, and then the supplier has to, in case you are looking to distribute the credit through a debit note or a credit note, or you have received a certain debit note or credit note, the same way you have to distribute as far as the credit is there. Now, when you are distributing the credit, there are the 3 type of credit which are carrying with you. We have a CGST, we have a SGST, and we have a IGST. So, for example, there is a UP supplier who have a credit available to him of all the 3 categories, CGST, SGST, and IGST, and he is having the 10 different offices in 10 different states. In that case, how he will transfer? So, one is the UP itself, and the other, say for example, UP head office, UP branch office, and Haryana branch office. How you will distribute? So the CGST, which the UP ISD will distribute to the UP IGST, UP registration, that will be the CGST only, CGST to CGST only. But in case the UP head office is distributing the credit to Haryana office, that will be transferred as a IGST. Same way the SGST from UP to UP, it will be IGST. From UP to Haryana, it will be the IGST. And in case of IGST, there is no challenge. IGST UP to UP IGST to Haryana, it will be the IGST. So this is something which is being given, and there are certain cautions which are being given. That in case there are the total credit, and out of that a credit is there which is related to only the Haryana office, then the credit will be distributed only to the Haryana. But in case the credit is not related to Haryana only but to the entire organization, in that case, that will be available on a pro rata basis of the turnover of each of the recipient. And the credit, no, it is like in a pro rata basis. But in case the credit is related to only 3 offices out of 10, in that case, that credit will be distributed among only on those 3 which it relates to. And then, as I mentioned you, if the credit relates to all, in that case it will be distributed among all the different registrations which the company is having for the purpose of this input service credit as a input service distributor. So friend, this was all from my side because I am aware about the paucity of the time, and we are like actually of the technical glitch. We lost around 10 minutes, but nevertheless, we have to see that there are large number of questions which are being raised by our colleagues on this forum. So may I request the chairman, sir, also that in case you guide us how to take it forward, sir. Over to you, chairman, sir. I just stopped the screen. Share. So let me take the question first. A few questions in the time our respected colleagues will come. Even if the GST payment made to the supplier, however, he has not filed the returns, still we have to bear that cost. Is it correct to levy for GST department? As I mentioned you, there are the judgments which are saying that otherwise, but right now the provision is like this only, and till the time the provision is not being challenged or being not like some rulings are not there on the provision, it will be like this only. The next question is there that a company is the maintenance and repair of vehicle. It also import part of for sale of its customer. In the current example, we will consider BMW as a vehicle. Customer approaches the company to change the engine of the BMW. Since the engine is not manufactured in India, he gives order to supply. The payment is overseas payment is paid by customer, and he asks Indian company for clearance of engine by paying IGST. The company paying long query. Company charges the customer only for installation of engine. For IGST paid at the time of imports. So the question is not there. It's only a case. Sorry, we lost 2-3 minutes time for this. Then we have a question. The Sudha Agarwal ji is there, which is she is asking a question. ITC not availed for 17-18 and 18-19 are lying in the asset side of the balance sheet. If we debit this to profit and loss account, will it be allowed expenditure as per the Income Tax Act? The answer is yes, it will be allowable. Though I am not the expert of the income tax, but I can safely answer this particular question. In case of a builder, as he covered under 5% of the GST tax, the question is from the Shri Kanji, that in case of a builder, as he covered under 5% of the GST tax, is it necessary to show all the GST input credit in GST or 3B and reverse? The answer is certainly, because you are purely in exempted operations. As I mentioned, you the T1, T2, T3. So if you have a credit related to T2, you have to reverse that credit as a T2 credit, and then automatically your ledgers will have a nil balance. In case that is the case too. The next question is about the returns, so I am not dealing with the returns. The next question is, can we claim ITC on capital goods, systems, laptops, communication devices? If we do software support services export under LUT, the answer is yes. In case you are using the capital goods for providing the output services, and the output services are either zero rated or being export under LUT, you can very well claim the credit of the same. So there is no challenge as such. The next question is, can a registered person claim ITC on the basis of the tax invoice issued by the supplier, even if the supplier has not filed the return? The answer is, as I mentioned you, in that case you are eligible to claim only 5% of the total such credit, wherein the supplier has not filed the annual return. And for 17-18, the rule was 20%. Initially it was not there, then it was 20%. Then how the canteen services input credit will be allowed? So canteen services credit will not be allowed unless and until you are in the business of catering. Then only the credit will be available. Then we have a question from Pranya Jain, Pranya Bed. If any SSC is engaged in the real estate business and opted new scheme, and he has business of sale of land and bungalow, then in the case for the payment of GST on RCM, whether indirect expenses incurred for both is to be included for payment of RCM. I need to understand the question because the clarity in the question is not there. Anyway, you can, we will ask you on the email only and will revert you the solution. In GST input credit allowed on the medical insurance of the employee if it is corona specific and if not. As it is being given in the number of clarification that if the mediclaim or life insurance policy is mandated under the law, then only the input tax credit is available. In case it is an optional scheme, say for example, in my office I am looking for the corona insurance for my employees, then the credit will not be available. But if it is mandated under the law, then it is available. Otherwise, it should be a key man insurance or otherwise. The next question is that Ashish Gargji, that I want to, hello sir, I want to ask if assessee buy mobile phone, fridge, AC, etc. on the name of the firm, is ITC available? So whether it is in the name of the firm, I am not touching this aspect, because if you are using these goods for the purpose of office, for the in the course or furtherance of business, then the credit will be available. In case it is not related to your office purpose, then the credit will not be available. So it is the purpose which matters apart from the invoice. So you cannot say that, okay, the invoices are there in my name, but actually is being used for the household purpose, then the credit will not be available. Then the next question is there from Hirak. Can the GST credit be availed on the sale promotion items provided to dealers as per the contract for achieving the sale target by public company is in its ITC? So you want to ask the certain goods are being used for providing the gift items. So as you are aware that they have given the specific limit of the gift item. So up to that level only they will not attract the supply part, but otherwise the credit will not be available in any case. So the credit will not be available, and since I believe that you are aware about the Schedule 1, that is the supply of goods for no consideration. So that point also you have to be very, very carefully note down. But the supply of goods for the gift purpose, disposal of goods without any consideration and use for the business promotion, the credit will not be available. Will there be any interest liability on ITC wrongly claimed by mistake but never utilizes? As you are aware that now the provision is the availed and utilized. So earlier in the service tax regime, Tejasvi ji, it was the availed or utilized, but now the provision is availed and utilized. But in the GST regime, it is the availed or utilized. So you have to pay the interest even if there is a mistake on your part. And then we have a question, Radhesham Agarwal ji. Sir, one, if a vendor is not depositing the GST, then would my dealer require to pay tax? It is that you have to reverse the credit. So it is not that you have to pay the tax. You have to reverse the credit so claimed in case the vendor is not depositing the GST. And the another is that if my dealer income informed to the GST officer or vendor for depositing the GST on sales, will this be helpful? Yes. If the vendor finally pay the tax to the government exchequer, then it will be a valid transaction and the credit will be available. So I believe that will be subject to the litigation only, but the credit should be available in case later on the vendor is paying the tax, but it should not be falling under the section 74, 129 and 130. Earlier it was rule 9BB of the Senate Credit Rules 2004, and now we have a 74, 129, 130. So the tax when the vendor is paying should not be falling under that particular bracket. Else credit will be available. Pooja Sharma is asking a question, but the only one line is there, so I can't answer. Manish R. Goel. In case of ISD, instead of opting for the IST registration, can we invoice? Yes, you can have a cross-charge invoice. Based on that also, you can transfer the credit, whatever is available to you. Vishal, then Puneet Jain. Usually partners use such club membership where partners convene meeting at the club with a potential client in the course of networking, etc. The meeting may or may not result in 100% conversion. But since, my dear Puneet ji, since you will be using this club also for the personal purpose and predominantly for personal purposes, you can always have a business meeting in over there. But to my opinion, it will not be allowed because nobody will be able to prove this, that okay, this is being used for the business purpose. Then the next question is there from, I'm just taking randomly some questions. Ram Bilas Goel ji. Input credit availed by the SSC with proper invoice, but supplier has shown the SSC as composition dealer and has filed the return. So you are B2B, you are buying B2B, he is showing B2C. Then credit will be available. The answer is no, because that will not reflect in your GSTR 2A. So this will be a loss to you, Ram Bilas Goel ji. Then the next question is there. सलोनी जी कह रही हैं कि फीड फ्रोजन हो गई है. Yes, we lost around 10-15 minutes because of this. So video stopped or no audio, video is not playing, large number of questions are there.
Yes, sir. What happened? I'll tell you, sir. Because of the connectivity issues, there was a problem, and we were able to resolve it. Once we get the PPTs from you, we will be sending the PPT to all the registered participants also, sir. And we propose to introduce 1 or 2 sessions in the next month also on the same topic, so that we give a justified timing for 4 to 6 hours only for ITC, where you will also be one of the speakers. I seek your time now itself, sir, next month. You are in that.
Yeah.
Yes, sir.
So what we can do, sir, only point is that since it's already 7 o'clock also, so what I can request you to, I can share my email, or like we can give a, so we are not able to resolve all the queries. So in case any query is there, they can write to me or the committee, and the committee can forward to me.
What I will do is, you can please tell your email ID on the air, sir. Please tell, sir. Which email they can contact you.
Yeah. So what you can do that, in case because of this disturbance, we are not able to clear the doubts of our colleagues, you can just note down my email ID, atulservicetax@gmail.com, and you can write to me. I will try to answer as much as I can.
Atul servicetax@gmail.com, continuously, small letters, ATUL. It is not ATHUL, it is ATUL servicetax@gmail.com. This is sir's email ID.
Yeah, so what we will do that, as being rightly guided by the chairman, sir, that some other time we will try to have the more clarity with all this deliberation. And even the chairman, sir, rightly suggested that we can have a little lengthier session, maybe 2-3 speakers can be there on the ITC itself. So to cover the entire gamut of ITC. Over to you, chairman.
Yes, sir. Sir, thank you very much, sir. First is sincere thanks to you. But at the outset itself, I apologize due to various technical difficulties. You being a computer man, you can understand that these things are not within our control. The internet fluctuations that happens. You are in Delhi. I am in Chennai. Our office people are in their respective homes in Noida. And important, the person who was giving us this link was sitting in Ahmedabad. And we know what is the condition of Ahmedabad as of now, and the power fluctuations that has happened. So this is the situation we are in today. But nevertheless, about 10-15 minutes were lost, but we were able to come out of that also. We will certainly ensure that in the next month, as I promised you, we will conduct 2 to 3 sessions only on input tax credit, so that the entire gamut of input tax credit will be known to all of you and will be taught to all of you in the next month. That is the promise I gave from the committee. Atul sir will certainly be one of the speakers, as he has agreed now. And thank you all for joining. Thank you, immediate past president, sir. Really, you have spent valuable time. If you can send the PPT to us, sir, we will mail the PPT to all the registered participants of this VCM. It will also be available as a download in the same link. As soon as sir gives us, we will upload it and it will be available for download. But nevertheless, we will send the PPT to all of you. This is my assurance. Thank you very much. Thank you all. Sir.
Smita ji, thank you very much, Rajendra ji. Chairman साहब, Smita ji, जो ये questions आए हैं ना, if you can download the questions and send to me, we will send the replies to you, and then you can forward to them.
Thank you, sir. Thank you, sir. Thank you, sir.